All right, guys. Tesla just reported literally 30 seconds ago. The stock is up and down. If you're new to our channel, we do a lot of earnings reactions. We do a lot of videos about real value investing. I'm not one of those fake people out there who says, I'm a value investor, and then I buy Amazon at $95 a share. So if you like this sort of thing, subscribe to the channel. Check it out. Trust me when I say you'll become a much better investor by listening and doing the things that we talk about. We're not here to give you fish. We're here to teach you how to fish. So Tesla was expected to earn $1.12 per share in EPS. They reported $1.19. They were expecting $24.07 billion in revenue. They reported 24.3. They're currently down half. Oh, now they're up. So yesterday for Microsoft shot up 5%. Fell back down a little bit, shot back up again. This morning it came down. I mean, the market is absolutely effing insane. And I can say the F word now, can I, Tim? I can say fuck now because we're not monetizing videos right now because we want to focus on good quality content and people learning about our software. So now Tesla's up 1%. Tesla is, I believe, the poster child, along with crypto, of this bull market. I love Tesla cars. I think they're great. I like Elon Musk. I think he's a smart man. But I separate the company from the stock. I separate the man from the stock. The stock is down a lot. The $414 all-time high was reached on November 4th, 2021, hit a low of 101.82 just 3 weeks ago. And I still think it's overpriced at 148. Okay, now it's up 3%. Now it's up. Okay, so what happened? They must have said something in so let's go pull up their press release, their earnings release. Tesla earnings press release. Investor relations, January 2nd, 2023. Why would it be January 2nd? So they haven't reported anything yet. Up 3.5%. So guys, remember, Tesla's still a car company. Now, for those of you who are watching me right now and shaking your head saying, Paul, Tesla's not a car company, I want you to do me a favor. If your mom takes money for sex, she's a whore. I don't care what she says. She can say 1,000 other things, that she's a caretaker, that she does this. If she accepts money for sex, she's a whore. She's a prostitute. That's just it. There's no way to change that. That's it. She is a whore. Tesla's 88% of its revenue comes from cars or something having to do with cars. It is a car business. You know, yesterday I was watching Shark Tank and somebody was selling socks. And they're like, well, I know you're a tech company. I'm like, wait, what? They sell socks. Just because you use technology to sell socks does not make you a tech company. If your mom sells sex using the internet, is she a tech entrepreneur? Nick, is she? Or OnlyFans. Tim, does it make your mother not your mother? No. She's still a whore, as Tim just said. All right. So guys, if you like my video so far, now it's down. Do you see this? Now it's down. So if you like this video, subscribe to the channel. Check out everythingmoney.com to learn about the software. We have thousands of people in here. Hopefully I get a lot of reactions about the whore comment. My goal is to make money investing fun. The history of it is very boring, and all these people on Wall Street wearing suits, stealing your money. It should be fun. If it's fun, you'll do it better. And I look at money and investing as fun, and you'll do it just as well as your mom has sex for money. So, let's see if this press release is out yet. Why is it still showing this one? It's in investor relations. Let's see. All right, so obviously people are blaming. Here we go. No, it's July 20th, sorry. People are blaming Elon Musk's purchase of Twitter for Tesla's stock price fall. It's not. Now, the analogy I always give is stolen from John Hussman. If a room is filled with gasoline, 3 inches high, and there's a fireplace on the end spitting out sparks, we don't know which spark will cause the explosion, but guess what? There will be an explosion. And overvaluation is the gasoline on the ground. Twitter is the spark that happened to happen, maybe. And even then, when he bought Twitter, where was the stock at? It's still fallen. It had already fallen a lot before then. And that's just the issue. So let's see what the text is here. Oh my God, I can't even read this, Tim. Could this be a smaller? I'm just going to send it to myself. Why do you have me as Big Daddy in your phone? Okay, so let's pull it up here, guys, because Tim has an iPhone 4 still. Okay, so here's what we got here. Don't start our riot. Volume. We're planning to grow production as quickly as possible in alignment with 50% compounded annual growth rate target we began guiding. Okay, cash. We have sufficient liquidity. Good. Profit. Good. Product. All right, nothing exciting. Guys, I look at quarterly results as just a way of taking advantage of people's overreaction to stocks. Now it's up again. Unless they say something in the quarterly results that actually affects the long term of the company. For example, I'm going to go to extreme. Elon Musk says, guys, you don't know this, but we've been having conversations with the government and they're banning all electric vehicles. That would materially change Tesla's future. But companies, if you go look at it, companies' earnings do this over time. They go up, but they do this over time. And if you've watched our videos before, I also show this as the way stocks go up. And that's the way it should be. You want to be the person buying when everybody's being dramatic because some sort of thing happens here that makes the stock go down. And also, you shouldn't get excited because they beat on earnings or revenue. Now, I will say this. These numbers 2 years ago would have cost Tesla's, or even a year and a half ago, would have cost Tesla's stock to absolutely skyrocket. And now it's not. I think we're in this stage of the bear market in some sort of way. Now it's going to go like this all the way down. It's one of these. I don't know which one it is, but we're rebounding. Either it's here, 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 whatever it is. This is going to be a long-term bear market. Valuations are crazy. People are buying into companies like Tesla and investments like crypto without any good fundamentals. Look at Tesla right now. They're selling price to sales ratio 5.5, which is down significantly. Down significantly. It used to be 20. The average car company is 0.5 to 1 price to sales. Now your next comment might be, Paul, it's a technology company. It's not. It is a car business. And until they start monetizing their technology in a way that gives them a really, really high gross margin, guess what? They have a good gross margin here. I get that. But we haven't seen this consistently without their incentivized plans from the government. And they're having issues with creating cars, producing cars. That is an issue. Let's go see what analysts are saying about Tesla. Okay, well, look, they're supposed to double their earnings per share in the next 3 years. Revenue is supposed to go up, but, pretty good amount. So it has a lot of growth potential. But look at this. The growth potential was still big when it was up here and didn't go up. Why? Well, let me show you a little chart I like to show you. Let's look at a company called Cisco. Look at Cisco. Cisco's currently at $48 a share. All-time high. $82 on March 27th, 2000. 23 years ago, it has not hit that all-time high yet. Now, what did Cisco do in the last year? It did revenue of $52.3 billion, net income of $11.5. Let's go see what it did back in 2000. In 2000, it did $21.5 billion in revenue and profit of $3 billion. So it's 2.5 times its revenue, almost 4 times its profit, and the stock is down. How do you explain that if you don't? The only explanation is stocks are a voting machine in the short run, and they're a weighing machine in the long run. If you overpay for something, guys, I do believe, this is something I'm going to go on as timestamp here. January 25th, 2023 at 4:16 p.m. Eastern time. Somebody please write it down for me. Please write it down for me. It'll be a long time before Tesla sees $4.14 a share consistently, where that becomes the floor. And probably where it even hits that again. It'll take a long, how long? Could be over 10 years. Could be 20 some years. I really do believe that. I really do believe that. It was making, Cisco made you might sit there and say, oh, Cisco's different. Guys, Cisco's not different. It's only different because you're experiencing this today. Cisco was going to be the first $1 trillion company, literally at that point right there. It was unstoppable. Their TV shows were made. Do you have Cisco in your portfolio? Do you have Cisco in your portfolio? Do you have Cisco? Does it sound like anything you've heard of? Intel was the same way. Dell Computer was the same way. Micron was the same way. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. So guys, I hope this makes sense to you because I used to be in everybody else's position. I used to have FOMO. I used to believe stocks went up because people loved the company. I used to think, hey, if the company's great today, it's going to be even better in the future as it makes more money. No, you can overpay for a good thing. It's a very common thing that happens, actually. It's very, very common. So I encourage you, follow our channel, subscribe, and also one more thing. Please forward this video on to 4 or 5 friends who you might sit there and say, listen to this lunatic talk about your mom being a whore and getting paid for sex. That alone should get a chuckle from them. 96% of our viewers are men, so I think it's kind of something that gets a chuckle out of them, and the other 4% I probably just lost. And luckily, my fiance does not watch this channel because she'd probably say, PG, why are you saying this stuff on? That's not very polite. Yeah, well, whatever. And if you know my fiance and you happen to talk to her, please don't tell her I say these things on the channel. Thank you very much. Subscribe, share this video. Take care. I created the software that you're seeing on the video and behind me because I needed software for myself. This is not something that was created for other people and I use some super exclusive, expensive software. This is the software I use. And even better, we have this community of thousands of people there. And the reason it's so helpful is it allows us to eliminate the emotional fear that makes people make the bad decision in investing. The right investing is 20% about the numbers and 80 or 90% about your temperament and emotion. And that's why it's awesome to have this community. The tools help you on the numbers. The community helps you on how to view your investments and your money. So stop making those terrible decisions that all your idiot friends make when they follow companies just because they like the company. For a little over $1 a day, you can have this entire software package. It'll change your entire future of investing and your money. So sign up now, risk-free, everythingmoney.com. Check it out.